Hello everyone. You must have seen this news in today's newspaper where RBI will purchase government bonds worth rupees 1.25 lakh crore via open market operation. Now what do we understand by open market operations? So basically open market operations refer to buying and selling of government securities by the central bank, which in our case is the RBI. What is the intention behind it? Intention can be either to absorb the liquidity or to inject the liquidity in the market. Let us try to understand it with the help of an example. So let us say here we have a banking system, and this banking system is facing liquidity constraints. It has shortage of money in very simple terms. Fine. Now since it has shortage of money, it has shortage of liquidity, so it does not have enough credit to provide lending to different businesses and different consumers, which is something a problematic scenario. Now what is going to happen? RBI is going to come into action. When RBI is going to see this scenario, what the RBI can do, RBI can go for the open market operations. So basically as a part of open market operations, RBI is going to purchase the government securities from these banks, and in return it is going to provide the money in the market, which is in other words, which means to infuse the liquidity in the market. And that's how what will these banks have? These banks will have sufficient credit. They will be availed with sufficient credit that can be used to provide lending to different businessmen and consumers. So the problem is solved. This is just, I would say, one of the important functions of the open market operations. Apart from that, let us say this banking system has too much of money. Now when the too much of money is there in the banking system, what it might lead to? It might lead to inflation. So what is RBI's job? RBI's job is to control the inflation in the market, which is one of the important functions of the RBI. So in this scenario, what the RBI can do, RBI can come into action, and over here it can sell the government securities to the bank. Now when it is selling something, in return what it is going to do, it is going to ask for money. Fine. And by selling the government securities into the banking system, in return the RBI is going to absorb the money from the market, which means it is going to absorb the liquidity from the market. And that is how, with the help of buying and selling of the government securities or the government bonds, what RBI is able to do, RBI is able to inject or absorb the liquidity from the banking system. Apart from that, this open market operations is also used to control the interest rate. For example, if the interest rates are too high in the economy, so what the RBI can do, RBI can come into action and it can pump money into the market by purchasing the government securities, and vice versa can be done if the interest rates are too low. So that's how the open market operation is a very important tool as a part of the monetary policy that is used by the RBI.